Happy Sunday, traders. It is Easter Sunday. Hopefully, you are all stuffed, had some fantastic meals, got to spend some time with family, and are preparing for your week ahead. I am Matt. He's Jacey. We're with Empire Algorithmic Trading, here to bring you Vwapvision's Stock Talk Weekly Review.
Where we use the volume weighted average price to make sense of the market, lets us know who's in controls, buyers or sellers. And right now, it seems like a whole lot of nobody is doing anything. So let's just get to it and take a look at some charts.
Weekly Review.
Time for yeah. Well, welcome back, Matt. It was kind of lonely without you. I think Stock Talk was a little condensed. Felt like I was just, I mean, I was just literally talking to myself. So, but yeah, no, it's nice to have you back. I'm glad the travels went safe, and hopefully you had a good time and everything's good with the fam.
Yeah, it was a nice little getaway to Arizona for both work and pleasure. So it was a good time and got to see the Grand Canyon for the first time in my life. Took the kids there as well, so it was a pretty cool thing.
That's pretty cool. That's on my bucket list. One of the things I definitely want to check out. So I'll hopefully get down there. But in the meantime, let's just take a look at some charts. It was rather relatively quiet week on the market. I'm going to put my glasses on here so I can actually see a little bit better. All right, so like we're going to start off with the bonds. I think this is the one of the most important markets in the world right now. As bond goes, the stock market will go. So right now we're back above the VWAP, which is a good sign, and so we would like to see some stabilization there. Moving on to the S&P 500. Again, long-term bounce off of that VWAP. We do have a clear bottom here. A little bit of a potential wedge form. We got some lower highs with some higher lows. That could be bullish. We did run into resistance at the 20-day moving average. You know what? I'm just going to plug that on this chart. We normally don't. We could lag the 20-day VMA, but they're pretty much at the same spot. The 20-day VWAP, I should say. But they're pretty much the same spot, so just make it easy on myself and not have to do that every day. We'll just keep that 20-day up there. Since it proved to be resistance pretty consistently throughout this downtrend, we're going to want to see that get broke first, and then we're going to want to see the all-time high VWAP up at around 5,400. No, I'm sorry, 5,600. We'll see that broke before we get into a green zone. So right now we're still in the red zone. Not a lot of stocks are setting up, not a lot of breakouts going on. Just a little bit of quiet before the storm. It was a short holiday week. There wasn't a lot of news, and now we're starting to get into earnings season. So that could be the catalyst. Of course, the Trump administration is the wild card in all of this. So depending on what they decide to do, but if they keep if they keep out of the headlines, which would be a shock, we would we would start waiting to see what companies are saying moving forward, what they're expecting, what they're seeing, particularly with earnings starting to ramp up. So that could be a catalyst, good or bad. Again, probability wise, we're still looking like we're going to be testing some lows, right? There's really not a lot of stocks set up. Some of the breakouts that have been pushed right back down. A lot of the gold stocks that we looked at last week are starting to show some topping signs, some change of trend signs. So those were some havens. The insurance stocks that were early leaders have been pushed back down. So we'll take a look at some of that as we progress throughout this talk here. Same thing with small caps. Small caps are setting up right below their resistance levels. And then same thing with mid caps. So a clearer look on both the small caps and the mid caps than you do see on the NASDAQ or the S&P, but you got some condensing going on. Just like I said, if we were in a more bullish take on it, then we would be setting up really nice for a good pop higher, a good test of all this resistance that we have up here. But again, it's so volatile with the news right now. And then if you take a look at the VIX is still at about a 2% average daily expected move over the next 30 days. So that's quite elevated as far as expectations go for volatility. So we really need to see that come down. And of course, a couple of good up days, a couple of good quiet days, we'll see that come down a little bit. But any further downside, we'll probably see this spike back up. So right now, it is a good time for red zones. And I do want to talk about red zones and green zones for all the people that are relatively new to our concepts and new to our ideas. So what we like to do is we like to consider whenever the index, being the S&P 500, is living below its anchored VWAP, we call that a red zone. So you get a couple of days in a row where it's trading down below that VWAP. We simply just stop buying, and then we just follow our sell rules, and we just hold off on buying until we're back in the green zone. Now, what triggers the green zone? And that is when the S&P 500 starts living above its anchored VWAP. So we keep that VWAP anchored until it starts living above that. Then we set a new anchor, and the whole process starts all over again. So that's what we're waiting for. We're waiting for stocks to clear out. Sometimes, it plans out. You get a little bit of volatility. Sometimes it doesn't really do much, but most of the time when a red zone hits, it's for a reason. We tend to get some increased volatility. The good ones last for about 11 days, maybe a little less. You start getting a little bit longer than that, and then they start to extend out a little bit. And right now we're at a pretty extended period. I don't remember
Wow.
exactly how many days it has been. Let's just take a look. Doo-doo. Yeah, we're sitting at about 38 days, which is a pretty good amount of time for the market to be in correction. So I think the longest one I saw on record that I have is like 111 days. So they can last some time, and it wears your patience down, right? You want to get in, you want to make some trades, you want to
Yeah.
make some money, but it's just the odds are not in our favor. And looking at some of the breakouts, you can see why. EverQuote broke out during the red zone, and it's got pushed right back down. Same thing with Crystal Biotech. Again, Techni FMC, Arcadis, Alliance Bernstein. You'll see this over and over. Goosehead, Baldwin Insurance, right? These are all stocks that broke out during the red zone, and they were just pure false breakouts, knocking you right back down. This is predominantly what we've been seeing for these past couple of weeks. Every once in a while, you do get some good ones, like a
Hmm.
lot of the mining stocks really held up well, but like we saw, they're starting to show some change of trend patterns. So all in all, this is the reason why we wait, because we just don't want to get caught in that. However, what we're looking for are the stocks that are holding up well, like Comstock Resources, TATT, TAT Techno. This one just broke out and just continued to follow through. Whether or not this holds up is going to be another story. What would be nice, ideally in this kind of trade, we want to see it tighten up, create a little flag, and then if the market breaks out of this range, breaks above the 20-day average, gets up into its all-time high VWAP territory, then this thing will probably break out of that flag. But it's not there, right? We're just going to watch and let these ones go. Sezzle,
Did
it's
you see
also,
real quick on that? Did you see the volume?
yeah, yeah,
Whoa.
that's a monster.
What happened?
Monster
Do you have
breakout.
any idea what happened there? What would have caused that
No,
much of an increase?
I didn't look it up. Usually it's earnings or a buyout announcement, but earnings were back here, so that's what caused this gap. So yeah, I didn't look it up, but
Interesting.
um, yeah, very interesting. Sezzle is holding up well. Netflix is holding up well. Same thing with
Huh.
Spot. Spotify is holding up well. Axon's tried breaking out twice during this red zone, got pushed back once. It looks like it's going to be pushed back again. It is finding resistance at its previous VWAPs here, so it does have a little bit of work to do, but it's holding its lows. Viva Software, it's another example of a breakout failure right there, and it's just not coming back.
Yeah.
Heiko, another failure breakout. So as you can see, a lot of them Zscaler, punch in the mouth right after it attempted to break out. It's come back a little bit, pretty volatile, kind of wild swings. Be nice to see that one tighten up a little bit. Halozyme, same thing, kind of looking really good. You're thinking, all right, man, but then the red zone brought it right back down. And as you can see, the volatility really picked up as volatility was picking up on the market in general. Another one that's holding up well is Groupon. Really kind of like the look of this chart. It would be nice to see that kind of continue to tighten up, continue to trade underneath this VWAP here that's around $19 a share. Breaks above that right as the market is hitting a green zone. Yeah, that's a potential for a long-term leader right there. And then Transmedics. This one is found a bottom well before the market. Of course, it corrected well as the market before the market totally did. But it's already back in close to its all-time high VWAP.
Hmm.
It does have some significant resistance when you look at some of these previous anchors. But this blue line here, this line around 90, that would be the relevant one that we're looking at. So we are seeing some potential set up, but not a lot, right? Tarsus Pharmaceuticals is another one. Pretty interesting pattern. We'd like to see this one continue to tighten up a little bit. But there's potential there. There's just not a lot going on. And until the S&P can break above that 5,600 level, even above its 20-day moving average, it's having a hard time. There's really no sense in taking any risk or putting any money in the market right now. And so what we're doing is we're just doing some studying. We're looking at what happens when the market hits a green zone. And we're going to put a video together for our Patreon subscribers that they'll be able to access here tonight that kind of shows you, hey, when a market hits a green zone, this is what we're going to look for. And we'll show you exactly how these stocks break out, literally right when the market hits those zones. So it's going to be a pretty cool little study to check out.
Definitely. And if you are not subscribed to our Patreon, please head on over there. It's patreon.com/ Empire Algorithmic Trading. You get access to our algorithmic daily buy and sell signals. Yes, even in a red zone, there can be some buy and sell signals as well. But again, we teach you what we do with that information and how we play it. What you want to do with it is up to you. But patreon.com/ Empire Algorithmic Trading, daily buy and sell signals, some educational videos, and just a really cool community to be a part of. Otherwise, follow us on all social media, Facebook, Instagram, X, Blue Sky. Learn more about us at VWAPvision.com. And for everybody listening on Spotify or watching on YouTube, make sure to like and subscribe to both this video or sound bit and to our channel as well. And we just want to say thank you so much for being with us on this journey as well.
All right, Matt, welcome back and happy trading.
Happy trading, Jace.
All right, talk to you in a bit.